Hey everyone, Les here, Chief Analyst of BG Trading Australia, and I really hope you guys are well. Today gonna be looking at S&P ASX200. We're going to be looking at SP500 as well, the US index, and try to understand whether the current market correction that we have recently experienced early August could happen again, provided that according to history, September and October tend to be a very negative month for stock markets, especially for US markets. What are the macro variables that could potentially confirm the expected and anticipated, not by us, but for most analysts, volatility ahead during this next couple of months period, which is not only going to be marked as Fed pivoting interest rates, but also by the fact that we might have recession ahead if we are not in recession already. I mean, I'm talking about US economy, and also elections, and all affect the stock market. All those variables make the stock market unstable and with high levels of volatility. How are we gonna play on this, provided that we are mostly exposed to Australian stocks here at BG Trading, and how we could profit out of this, what could be a significant correction ahead. So let's have a look. Remember guys, this is not a financial advice, it's just us from BG Trading sharing with you how we apply BGS20 strategy together with our VP members to chase 20 to 40% profit in a very tight stop losses, trading small and mid-sized caps, sometimes large caps, avoiding nano caps most of the time. And how we set up targets, stop losses, how we link macroeconomics with fundamentals, and then we get a better chance to succeed in trades. All here in this channel. For if you like, please subscribe, hit the like button as well, and share this video with someone that you believe would be interested in our content. Lastly, I just want to invite you to become a member of our free Facebook community. We call that by Grow and Sell strategy for share traders, and also our BG Trading Facebook page, which we post a lot of great quality content, including market overview, stock analysis, and a great deal of conversation with members of this community. The best, it is for free. Let's jump straight into understanding what's happening with the S&P 500, the major US index, and how this could be a very strong sell-off signal, provided that early last month, early August, we had this huge correction on the back of Japan increasing interest rates. So we could see Japanese central bank doing again, and then we could see even a further correction out there. But when the narrative changed, from everything looking really good and positive with interest rate cut, shifting to potential recession, or if we are already in recession in the US, then obviously a fear starts sparking in the market. But what really concerns me in this case is this chart formation right here. This is the, once again, S&P 500, and if you look at this, we had a higher high here early August, end of July, and then we have this huge correction here, and then very strong rebound, like V-shape rebound, but now the market struggled to hold, and this very strong volume on a red Heiken Arch. And if you go to candle chart, you can see fully what that looks like. So we have this strong distribution. What happened here? Distribution candle, which suggests that we might have a further correction ahead. And provided that September and August is a very negative month for the stock market, then would be easy to consider that we might have a sell-off, and then we could see value at the bottom of this channel or at what we call long-term moving average. I wanted to highlight this. The SP 500 has rallied considerably over the last 12 months and is trading well above the long-term moving average. It would be natural for the S&P to test the long-term moving average in the worst case if the narrative correlates to recession. So then job numbers will be critical for that. If the job numbers come negative this week, then obviously we would have a further correction right there. Look, I'll be comfortable to jump full into the market, in US market, if I was to, if S&P 500 tests 5,000, which it would be about 10% or more, like 15% correction from here. Some people tipping for 40%, 30%. Look, I think 15% correction is a considerable correction, and I will be finding value that might take a month, or maybe doesn't even happen, or we go sideways here. But we are expecting a correction, especially because now we had this sell-off at the lower level than we had in early August, end of July, which concerns me here with this red candle and relatively strong volume to the downside. Now that we already looked into S&P 500, so how does last night movement has affected the S&P ASX200? Pretty badly. So fell almost 2% today, 1.9%. Very similar movement here. We had recently test this all-time high, but then the market bounced from this all-time high again on what could be, I don't think it is, because normally the lead time is longer for a valid double top formation. So I'm more inclined to think this is a side consolidation with a natural correction, because we are on the worst month for the year generally, which is September, October again. So we could see another attempt of testing this so-called support level here around 7,600 for the Australian top 200 companies index. So for me now, it is a negative chart formation. Now, if you were interested, there is ways to profit out of this. And so there are many ways to mitigate the risk when we have a bearish, short-term bearish situation like this, or high volatility ahead. So what we want to look into is obviously try trade as minimum possible, because trading in a high volatility is extremely hard. Okay, and then what I normally like doing is I either like holding cash and start topping up high quality stocks when when the market hits this bottom here, and then we see a potential reversal to the upside again, or you can even profit out of this potential correction here. Let's say if it falls further, you could profit. If you want to learn how to profit, I have, just go to bgtrading.com. We have what we call how to recover from losses, a course. This is a very straightforward mini course. I think it's about not even a couple of hours, and I teach you how to recover losses or how to profit from market correction. It's about $82 per this course. It's one-off. You can take the course as many times as you want, but I teach you how to detect the critical points when the market moves sideways like this, which I think is going to move sideways. I don't think it's going to crash, but I think it's going to move sideways. When moving sideways within this range, you can make really good money by not trading stocks, but potentially trading the index and some correlated ETFs that allows you to profit from when the market's falling and when the market is going up again. And not only allows to profit when the market's falling, but also helps you to mitigate the risk if you're still holding a long position. This is a very interesting topic, very interesting course. Overall, from if US market falls, we are very likely to fall as well. So essentially, the attention has to be to the US market. If you look at the key companies for the ASX, even CBA fell quite considerably to the 2% is a big fall for CBA. Then we have a BHP falling 2.5% in a strong downtrend here, so I wouldn't be buying again. BHP, just wait. It could go to 36, 32, who knows? It would just bounce as if any potential economic data that shows that China economy is not as bad as looks like, that could improve as well. But the outlook, the narrative now is whether US is in a recession. If there is a recession, then material and energy stocks will collapse, will tend to go down quite substantially until the interest rates start kicking off. Maybe 1, 2, 3 interest rates cut start kicking off, and then the economy start recovering. But then it's not going to happen until 1 or 2 quarters from at least 2 interest rates cut. So we need to wait. Obviously, it is interesting that those large caps are falling because they're now offering what small and mid-sized caps are offering, which is 20 to 40% upside. So even like BHP is now offering about 30% upside, should test again the highs, which is just a matter of time for that to happen. Now the question is, if US goes to recession, whether it's going to go to recession or not, how low BHP will fall, and could fall further if we have negative job numbers. This is a very strong hypothetical support level at $32. Yes, I know it's going to be dooming for many of you if BHP falls to $32, but that's the reality. We cannot deny the reality that if US goes in recession, we are very likely that we could see deep falls on material stocks even further. And even if you look at Fortescue, has taken a huge hit today, 8% down. Fortescue next support level, next strong hypothetical support level is around $14. $14. So I wouldn't be buying now. I have people asking I should be buying now because the Fortescue has came down 8%. So now it has broken this support and is likely to test this support. And if a recession is confirmed in the US, we could even see further downside for Fortescue. Obviously, it starts showing strong value here, but the lower you buy, the more de-risked you will be into this so-called material position. So just stay put. Remember, cash is also a position. If you're holding cash, you don't have to jump in the market. Just stay in cash. Nothing wrong with that in the volatility. It's better holding cash than actually holding several negative positions. Just think about that anyway. And yeah, so S&P ASX200 taking a huge hit, and obviously if BHP keeps falling, it will drag the market down as well. The narrative now is whether US will enter into recession or not. All those interest rate cuts, I think, has been already priced in the overall market. Unless you look into specific stocks that can directly benefit fundamentally, like buy now, pay later company stocks. So I think the overall market could suffer pretty badly if US goes to recession. So just be careful. Even though moving sideways, the S&P ASX200 moving towards 7,400 could mean huge falls for many stocks, including the stocks that we are trading. So you just gotta mitigate the position by using some certain tools that allow you profit when the market falls as well. So essentially what we're doing now, we're hedging from like about 25% of our portfolio, we're hedging in case the market falls. If the market falls, we're gonna make money, and then we take this money and dump it into high quality companies that could have their stocks moving up or recovering quite quickly. Guys, thank you for watching till the end. If you have any questions, please put in the comments below. Other than that, if you're interested on our online courses, you can always chat with our customer service team in our chat box on bgtrading.com.au and have access to our online courses or VIP membership program as well. We'll see you in the next video. Bye.